for lack of a better word, is good.
The time came when the ticker tape in the broker's office told a new story. It was panic. 16.5 million shares of stock sold in a single day.
Ladies and gentlemen, welcome back to Stock Market for Beginners, the #1 podcast from the Stock Market for Beginners Facebook group. I nearly completely flubbed up there, and Lloyd was looking very happy there. Yes, we are here live in the Facebook group, guys. This is Stock Dirty to Me. We help you understand the stock market coming from ordinary guys. And if you are watching us live, you can see that there's a different face here. It is our good friend, the money millionaire friend, Lloyd Ross is
What's
joining
up,
us. How you doing, sir?
I'm doing good. I'm good. I'm doing great, actually. Doing great. Yeah, don't have a cold beer on my hand like Tony, but you know, it's
Well,
only
it is
10
like,
a.m.
yeah, it's a little early for you to have that.
It's always 5 o'clock somewhere, man.
Well, how about this?
Beer open.
When Babba cracks 200, I'll bring a beer.
Oh, that's gonna be fun. Good.
Yeah.
We got some lives here. We got Oklahoma. We also got Dorothy, and constant presence on the show. So thank you, Dorothy, coming in from the villages in Florida. So Tony, how are you doing?
Good, man. Made a lot of money today. Just sitting back and relaxing. It's actually been a pretty good week. The markets, the overall market index has basically erased 50% of its losses for the year in just the last week and a half. So they were still down like 4.5% on the year, which isn't too bad. I thought it was going to keep going down farther. It still may. I do still think we're going to finish in the red for the year, but overall, not a horrible year considering all of the craziness that's happening right now in the world. So not yet anyways. We'll see at the end.
Yeah. All right. So we have a few topics on the agenda already. Let's start with what's going on with Facebook.
Yeah, well, we should probably start with the fact that our buddy Lloyd here made $90,000 this week.
I think total about probably 65,000. I think.
Damn, that's my entire investment portfolio.
Yeah, but man, there's people out there making Warren Buffett did $9 billion in a day. The other day when Apple, had its earnings, he made $9 billion in a day.
Jesus.
So
he's no Kathy Wood, but he's
he's no Kathy, but everyone has aspirations, so maybe one day he can be like Kathy. But, so it's been a good week. I mean, it's been interesting because you have this whole market when the old saying goes, a high tide raises all boats. And in the last couple of years, we've had all these people who are new to the market who think they're amazing at stock picking and so forth because they've actually there's a full moon and the tide's really high. It's king tide and it's helped everyone rise, including Kathy Wood. So, but I think tide's going out now and you're going to see who's swimming naked, as Warren Buffett says. And I think that there's a few people swimming naked. Kathy Wood's one. She's stark naked and the tide's running out pretty quick. And it's pretty obvious. But the market looks like it's juicing back up a bit. But I think the Fed, if it tightens rates this year by 5 or 8 points, it could be a real volatile year, right? So didn't know you had a cat.
Got a cat cameo.
So Facebook's interesting because it actually is a wonderful business and it's pumping out cash flow like no tomorrow. It's arguably one of the best businesses in the world, run by a very capable guy who's got a good vision. It's reinvesting a ton of money into its R&D for its reality labs, which is actually producing revenue. And it still had overall user growth. It just didn't have growth in its Facebook platform for the first time. And that one bit of news flipping hammered it. It hammered it. It had the greatest, 320 billion pulled off its market cap in a day, the greatest fall in a day in the history of US stock market or any market.
Yeah, it's definitely significant. It's the most oversold stock that I've seen
Right.
in a couple of years. And I mean, right now it's PE ratio is the lowest it's been in a decade, maybe. I mean, it's at
Yeah.
16 right now, which is incredible value.
Yeah.
But a PE ratio of 16 for a tech company, yeah, it's social media, but it's a tech company.
So what happens? Well, Pete, to that point, Tony, Peter Lynch, everyone knows Peter Lynch, right?
Yeah, of course. Yeah.
So Peter Lynch has got this thing in his book, One Up on Wall Street. If you read that book, he uses this thing called the PEG ratio, PE growth
Yeah.
ratio.
The forward, yeah. For
Yeah.
forward, yeah.
So what's interesting with Facebook is that its PE is 16, but it's free. I think it's free cash flow growth for the year.
It's looking at 1.2 I'm looking at right now, which is for PEG ratio.
Yeah, it's really come back. So like its free cash flow is up 67% for the year. It's massive.
By the
So
way, this company still makes billions of dollars, even with them putting $10 billion over the next year into their Meta project,
Oh my God.
and them factoring in the losses for the Apple privacy policies from the new iOS update. Doesn't matter. By the way, a lot of people are like considering that to be a huge problem in the future, but that was a big problem last quarter for companies like Snapchat, and I forget the other social media company that has all these companies are dealing with the same issue from Apple, and they still had record earnings for this quarter.
Yeah.
So it's really, they're going to find ways around it.
Yeah. Well, its free cash flow generation for the year was 38 billion. So it's a cash pumping machine, one of the best in the world at it.
Do you have any
So I don't think it's
money
actually.
in Facebook right now, Wood?
Do I have any money? Not yet, but
I put,
I'm
was it
pretty
last
confident.
Friday? Oh, go ahead.
You go. I'm pretty
Last
confident.
Friday I put 1,000 in.
Yeah.
And Monday I put another 1,000 in. I was gonna put like 5,000 in, but I wanted to see what was gonna happen first. And it looks
Yeah.
like this could be a dead cat bounce, or it could be the turning point. But like you said, I expect March we're gonna see more downturn because people are gonna panic about the Fed and the interest rates rising. And one point I'll make about that is a lot of people are like, is the US economy done? Is the stock market done? Blah, blah, blah. The US stock market no longer going to be the superpower, blah, blah, blah. Guys, the S&P 500 and the US stock market has already gone through this in the 70s. It's gone through pandemics, wars, the Cold War,
The Great Depression.
Major inflation in the 70s, people waiting in line for gas, having to get gas by the last four digits of their social security number. You could only get gas on certain days of the week. Like, we've seen some really crazy crises in this country. So this isn't the first time that something like this is happening. I know we've produced a ton of money, but we've dealt with this type of issue before. We've dealt with terrorist attacks. We've dealt with the housing crisis, the mortgage crisis. We dealt with financial crisis. The dot-com bubble. We've gone through this type of stuff before. So
Y2K, like we've done all.
I think
we're good.
People they have this weird thing that they think the stock market is this like machine or this thing. The stock market is just a representation of the businesses in the United States and around the world. So if those businesses all go broke, then the stock market's worth zero. But
yeah,
the odds of all those businesses going broke on the same day are, the only way that's going to happen is we get hit by a meteor, or there's actually a real pandemic that actually kills people, or some sort of, I don't know, the world implodes.
an apocalyptic event.
Some apocalyptic.
But then it won't matter anyways. Money won't
exactly.
matter.
So who cares about that money? Yeah, it
Yeah.
doesn't matter. So I think people don't understand that it's actually made up of business. When they're buying a stock, they're buying a share in a business. And so
they're starting to understand that now that we're seeing a red year.
Yeah, they're understanding that now.
But I think
like a casino. Interesting about Facebook is Lee Lu, who's actually been mentored by Charlie Munger. And Charlie Munger gave him 880 million of his dollars, and he turned it into 800 million. And he's a real good friend of Warren Buffett and Charlie's.
Not bad.
And he's
Good friends to have.
Yeah, and he's a real, like, he's one of the major billionaire investors, right? And he's good. And 10% of his portfolio is in Facebook before it fell. So he saw value in that as a business before it fell. So I can't imagine what he's probably doing now. He might be backing the truck up to go and buy a ton more at these prices. And it's held by a lot of really big hitting stock pickers. It is a great business. And I think the thing with Facebook is people are worried about its future growth. But what I'm excited about is the fact that Mark Zuckerberg is so young. And he's very clever. He has wonderful engineers, and he has a great brand, and he owns Instagram, which is the #1 most downloadable app in the world last year. And
WhatsApp.
And WhatsApp, which he hasn't even monetized, which
worldwide.
Yeah. He hasn't even monetized it. And they got Reality Labs, which is actually producing revenue. It's a wonderful business.
Do you think, I think there's a little bit of Mark Zuckerberg, for whatever reason, is kind of a polarizing figure, and a lot of people hate him. And I think a lot of people want to see Facebook fail because, censorship or whatever ideas they may have about the company and him. And I'll admit he is kind of robotic-like and very alien-like when you see him talk and stuff, but he's clearly really smart. And I think there's some bias there,
Well, people just love getting on the bandwagon, and people love a villain because all Disney stories have a villain, and you need one. So they've chosen him as the villain for the story and so on. What I find really ironic,
successful people. Yeah.
Well, yeah, but what I find ironic about the whole thing is they voice that opinion about him on his platforms. So it's ridiculous. So
yeah, Facebook's done as they're typing it on Facebook.
That's right. So this is what I think of when I think of if I'm going to buy this business. Is it a reasonable? Does it produce tons of cash? The answer is yes, heaps. Does it have a moat? Yes, it does. How do I know that? Because the other day not the other day, but a few months ago when WhatsApp, Facebook, Instagram went out, literally our businesses were fucked. Like, I'm dead. So my whole livelihood depends on these platforms. So does my dad.
You can't just go to TikTok? Why can't you do it on TikTok?
He's not doing the dance on TikTok.
It's not the same. It's not the same.
But not just that, though. It's like the systems of our business are embedded in the Facebook platforms of groups, right? And I think that people don't understand the depth of the moat of this business enough. And that's why they're like, it's going to go. It's so embedded in our culture and what we do in our businesses that it's very hard to not have. And even communication with all of our photos are on there, and all of our, Instagram is how we have free speech, and we're all like narcissistic. So we're like, we want to put our photos up so other people can see us, and right. So that's not going to go away. I think it's an addictive thing, and he's got a great product. It's sticky. It produces a ton of cash, and right now it's at a reasonable price.
And I have a question.
Yeah.
Would you? Now they're putting a lot of money into Reality Labs and the Metaverse project.
Yeah.
And let's say, obviously, if that works out and it blows up, I mean, Facebook stock's literally going to go to the moon. Mm-hmm. But say this project fails and they end up dropping, $20-30 billion in it over the next couple of years. Do you think that is going to hinder Facebook significantly? What do you think the downside of that is?
Well, the interesting thing is that it doesn't need the Reality Labs to work to win, because it's got so much cash flow coming in that it's got a moat. It's hard to beat. It can still grow steadily and make money and pay dividends. It can do all that. So it doesn't need it. But what I look at is I think about the psychology of Mark. He's an owner of the business, which is really powerful. He has skin in the game. He's got more skin than anyone in this game. So when he takes the skin that he's got and he takes all of his very well-talented engineers and his reputation and he puts it all on the line for something and pumps it full of 10 billion worth of cash, I'm very confident that he knows it's going to pay off. There's always an element of faith when you're in business to go and attack something, but it's already producing. Last year it produced 2 billion in revenue. It's not, is it going to work? It's already working. They just realized that it's the next growth engine of Facebook or Meta, right? And that's why listen, you don't go and change the name of Facebook to Meta and then put all your engineers and spend 10 billion in something you don't think is going to work. That's not how he became successful. He's tested this already It's not if it's going to work, it's happening.
Yeah.
So it's the future of gaming even. I mean, we all know that we're going to be consciousness uploaded to a computer one day in the future. It's flipping obvious. You can see it happening. He's just moving us forward into that realm.
Also, we all get to have the holodeck in our house if we want. Like, come on, who doesn't want to have the holodeck from Star Trek in your house by just flipping on some goggles and boom,
Yeah.
or Ready Player One? Like, these are the kids that grew up reading these books, so they're just creating it for themselves.
What about this? Apple, which is the greatest company that ever existed, right? Apple is the number one business in the world, and its next growth engine is wearable tech for the metaverse, because it's going to go into wearable virtual reality equipment, right? And that's going to be just as valuable to them as this, because this is how we talk to each other now, right? So it's just going to go, oh, let's put it there so they can go into the real, like into the reality world, not just type with each other, but be with each other. And I think Facebook or Meta and Apple are actually more closely linked than what, both the CEOs realize. They're one and the same, because if you weren't on social media, this wouldn't be as important.
Yeah, they almost need each other to succeed.
They do, and I'm sure they realize
thrive with each other.
They do. And so I think Apple's a wonderful business to own, and see Warren Buffett thought that too, and he's made billions from that. And Facebook's wonderful to own. I don't know if it's going to be these prices again, but when you have a PE of 16 times earnings and it's pumping out 37% growth in free cash flow for the year, it's insanely cheap. But you can't catch the bottom of it, which is painful. So when you're investing, you're like, shit, I can see the value. And the type of businesses you want to invest in, when you want to buy, you don't pull up a spreadsheet and start doing discounted cash flows. When you see something, an opportunity, and Warren Buffett talks about this, it's got to jump out at the page at you. Manish Prabhai also talks about it. He says he never uses, in one of his 10 rules and 10 commandments of investing, never use Excel spreadsheet. If you have to use an Excel spreadsheet, it's not an easy spot. And Charlie Munger says if it's not an easy spot, it's a no. That's why they call him the abominable no man. So this is like one of those opportunities where it's like, holy shit, that's cheap. You can see it.
I agree. Phil will contest to this. When we were in our group chat on, I think it was Friday or Thursday last week, it dropped 22%. And I'm like, that's impossible. I'm buying this immediately.
You were dead set.
I
Saying
literally
like
bought
10K.
it the next morning at open. I didn't even care. I think it was like, I bought it at like 229 at first. So it dropped more, but
it's now at 231. So you made some money.
Well, I actually put more in and I'd averaged down. But so I'm at like 234 or something for a cost. But I don't even care. I mean, it's to me, it's just a no-brainer. They dropped 26% for no reason at all, like panic,
Yeah.
It's and it didn't have a bad earnings report.
It beat earnings. That's what's stupid about it. It actually beat their earnings from the last quarter.
But this is what happened at Apple, right? So back in 2016, the same thing happened to Apple. Its revenue from its phones went through a bit of a wobbly spot. And the likes of Carl Icahn and those big billionaire guys that run after growth companies, like Netflix, they all sold out at that point. They're like, you know what, growth's over, game's over. It was fun while it lasted. Bye. Goes to a 10 times PE. And you know who scoops it up, puts 50 billion in it? Warren. Right? And he's
because people thought they were done. They're not going to sell any more phones.
Yeah.
And then all of a sudden they make dozens of other products and
he's 3x'd it. They got the ecosystem. They got payments. They got, and so we don't know.
They're making their own chips soon.
They make
Yeah. So this is happening to Facebook now. It's pivoting as a business, which all businesses do. We all pivot at different times. And it's reinvesting its cash flow into a new growth engine. Do you know what would be really scary? If it wasn't investing 10 billion into something. That's when you're like,
trying to make more revenue, trying to come up with another revenue stream.
Yeah.
And people are freaking out.
I think it's smart. I think they're on track. I back it. I'm close to buying. I've been tossing it up. The only thing that's stopping me is I don't know what the fallout's going to be like from the Fed rate rises this year.
There's other factors at play.
Yeah.
So you're just waiting to see if it drops more?
I would love to buy it at 12, 13 times earnings. Do you know what I mean? Like, it's cheap, but it's 30% cheap. I want it to be 50%. I don't have to swing at it. Nothing's forcing me to. I'm just watching. And sometimes, because you don't have to swing every pitch, you can't dance at every wedding either. I think it's a great company. Very, very rare that it does this. Like what Tony said, it's 10
Yeah,
years since.
I never buy any stock hardly ever, and that like
No,
individual stock, and that like last week I'm like I have to buy this at
it jumped out
26%
of the page.
drop, you
Yeah,
know.
yeah, yeah.
And I was
Last,
anticipating more, but more
yeah.
dropping, but
I did the same with Babba when it hit 111. I was like, oh fuck, this is so cheap, right? So
yeah.
I think it's a great business. I think maybe I'll own it. Who will own it? Maybe the next couple of days. I don't know.
Yeah, I'm probably gonna end up with 5,000 in Facebook. I didn't put it all in at once because, like you said, I wanted to see what happens. If March
Yeah,
comes and it drops more, I'll put the rest in, and then I'll just let it sit. I expect it to trade sideways this year. I don't really
yeah, definitely,
expect anything.
definitely. No, it will trade sideways for at least 12 months.
You're
I
gonna
think
have
it
to go
may,
through some pain, so
yeah. I think
yeah.
the meta thing has to kind of become
Work
profitable.
itself out. Yeah,
It'll work. It'll rise before it becomes profitable. People always wait until things look rosy before they buy, and they miss all the growth.
yeah.
You know, there's a guy in my Discord, and he said, oh, I hope Apple goes through this same experience so I can buy some. And I said, man, the chances of you buying something like Apple when it does this is very slim because you'll be scared.
You know
Right
what's
now,
crazy?
Apple's going through a dip and people are scared. They don't touch it, right? And this is when you got to be brave when others are fearful. And that's what Warren Buffett talks about.
Bought Apple when it was $97 a share. After
Amazing.
before the split, I bought it before the split, and it ended up being 97 a share on average. And at that time, everybody was like, "Apple's too high." Like even I was like, "Ah, it's kind of high, but it's Apple." Like 5 years from now, it's Apple. And man, I am so glad I did. And I wish I put more because it's like 180 a share right now. So I'm like,
Yeah.
God damn it.
There's a
Some
good
like
lesson.
those type of companies to me are never too high. Like, unless something catastrophic happens, you know.
Yeah. Well, if you look at Apple as a business, let's say its return on equity is like 150 percent, which is ridiculous. Like it for every dollar it reinvests in itself, it earns $2.50 back. And
It,
so it's such a great business with whenever your return on equity is high like that, whenever your return on equity is higher than the PE ratio, it's basically a buy. So if you look at Apple, even though it's like quite richly priced or it's fairly priced, the
right
return
now,
on equity
yeah.
is so
Yeah.
high compared to its PE of 28 that it's actually a buy even today. And you'll see that the analysts have pretty well got buy ratings on it all the time because it's such a high quality that what Manish provides is you almost can't overpay for a company like that. And that's what
It's
happened
one
to
of
you,
those it's one of those
right?
things if you think about it, I was talking to Phil about this and Dalt about this last week. We're like, if Bitcoin ceases to exist and goes out of business per se, it's
Yeah.
not going to change my life or anybody's life really, other than the money that you have in it. But if
Yeah.
Apple goes out of business, that's going to significantly affect my life. I have to change all my products.
Yeah.
I am in the ecosystem, And if Google goes out of business, we're all screwed. Like,
Yeah.
So there's
Oh,
like those companies that,
totally. If you look at Apple, Google, Facebook,
Microsoft, because all the
uh,
work computers, everybody uses
yeah,
Windows.
yeah, I would say, but there's this little a competing operating system with it that we wouldn't all be dead. But the likes of Google and Apple mainly, Google, Facebook, I think
Amazon.
too. Amazon, yeah, Amazon.
Yeah.
These are the types of businesses you want to own, right? Here's why the reason why I bought Bubba is because without Bubba, Amazon would be fucked. Can we swear on the show?
Yeah,
Anyway,
we're good. We're
No,
good.
no, we're gonna have to bleep that out now. I'm just kidding.
Oh,
you
Jesus,
know what I
I'm at
mean? Like
work.
people don't get this. Like I even Dot tagged me in a post, and this guy was talking about I wanted a side hustle. I noticed everyone on Amazon's buying from Bubba and selling. I'm like, yeah, because if Bubba disappeared, most of the world's physical product businesses would be in shit. It would
Yeah, the
be
drop
bad.
shipping
That's
is
because we
gone.
don't produce anything in the U.S. anymore. We need to
That's right.
start producing our
Correct.
own products.
Yeah,
And if
yeah,
anything we do produce is too expensive,
Because
yeah.
the
you know,
cost of
It'd be very, very
we're
detrimental.
capitalists,
But
man. It's
yeah,
great to be a capitalist, but at the same time, it's all about maximum profit. So you have to
yeah.
sub all your work out.
I'll tell you what, that's not a bad portfolio for anyone. Like looking at the businesses in the world, here's what I would own if they're all the right prices: Apple, Google, Facebook or Meta, Microsoft, Alibaba, Chinese exposure too, and maybe one of the banks, but maybe not. Maybe Bank of America. But that's
Say
probably
JP Morgan, maybe. Yeah.
maybe the entire portfolio of what you'd probably want to own.
It's not a
Or you
bad
could own
portfolio.
everything, SP 500.
It's just
QQQ.
those. They're just
Yeah.
so you can't almost live without them, and I think they'll print profits for the next 30 years.
Yeah, if you own just those companies, they'll probably beat the S&P 500 every year. If you had a
Yeah.
portfolio with those 5 companies.
Yeah.
So
they will.
we have someone who's saying they have 20 Googles and they're down as
fuck.
fuck. I'm not worried. Like it's going to drop. Like you can't look at it a month. Like a month doesn't represent the life of the company. It's going to have it up and down months and weeks. So you need to look at it at a whole.
If
Like
you
what is it?
value the internet,
Yeah,
don't worry, Google's going nowhere because they
yeah.
basically
Google's
run the
going
internet.
nowhere. They have more revenue streams than there are lakes probably in the world.
Gentlemen, I have to run. This 30 minutes has gone so fast,
Okay.
but
No
I've got
worries.
to jump on. But I'm looking forward to the next episode, and I think Facebook's a buy. Okay. See ya.
There we go. Awesome. Take care,
Appreciate
Lloyd.
it.
Thank you again. All right, Tony. It's great having Lloyd on the show.
Oh, it's great. He's a great fill-in. Well,
Yeah, we
actually,
also
now he's our co-host.
yeah, he's officially the co-host. He may not be able to say the full episode because he is a busy millionaire, you know. But will give us at least 30 minutes a week. So make
He's
sure you
our
have your
new
questions.
resident expert, who
Yes, he is.
replaced our old resident expert, and yeah, it's probably no one more qualified than Lloyd.
No, he literally is a retail investor who became a proper smart investor by following the greats like that. And it's always great to have experts like that because it helps me learn more. That's all I care about.
He started out the way that we always preach.
Yeah.
Started out with index funds, and the thing that he had that a lot of people don't have is you can invest in an index fund like the S&P 500, and you could put $50 a week or $25 a week, and that's going to be great over a long period of time. But what Lloyd did was he loaded up on that. He created a side business,
Yeah.
had a lot of extra multiple streams of income from real estate and other avenues, and put $500-600 a week into the market. And in 10 years, he became a millionaire doing that.
Yeah, he
So
10x his fucking his mind
it's
by
all
doing
about
that.
finding a side hustle or keeping your debt low and investing as much as you can. There's no secret to what he did. It's pretty easy. We all kind of know what to do. The problem is having enough capital to do it, you know?
Yeah, it's so getting $1 million portfolio is just if you need to find something to fund that. So look, we all have our day jobs, our 9 to 5s, and then
Yeah.
you do have that hours afterwards. You can build an affiliate marketing for free. There's thousands of courses on YouTube to teach you how to create an affiliate marketing, and you just do that and you just work slowly on that. And over time, you'll get it. You have to invest the time. It's not a overnight thing. And then once that starts making you a lot of money, take that money and invest it into the stock market. There
Yeah.
you go.
You
So
could do what our host Phil does. Phil is a podcast expert. He got Lloyd Ross to be the number one financial podcast, right, in
yeah,
Australia.
he's the number one
Incredible.
Australian finance podcast for a couple of weeks, at least 2 months. We got him there, and he's standing high in the ratings there. Plus, he's a top 3% podcast listened in the worldwide, so he's getting
Amazing.
close to about 1,000 to 2,000 downloads and listens a month on his Money Goes On
And you
Trees
gave me a
podcast.
lot of great tips for
Yeah,
my
helping you,
podcast. And I've hit the top 100 in investing in the United States a couple
which is
times.
difficult to do because there's so
It's really
many in the
hard.
US. Yeah.
Yeah, I think I had like 80 for like my best rank out of the US. So Phil, contact Phil. I mean, you could start a side hustle making a podcast and talk about things you like to do. He could help you out with that. That's his side hustle. You could
Yeah.
start a course on Udemy or some other platform like I did. There's a lot of things you can do. So
If you have an expertise, now is the perfect time to start a side hustle. It took me 6 years to get up to the point where I was comfortable enough to start selling my services as a side hustle for podcast production, helping people grow their podcasts and businesses monetize podcast listeners to get them to get more revenue in their into their world, so that they can use that money for whatever their needs. So if it's a business owner, they can invest it. So if you start one, if you have a job that you're really good at, you know, talk about it, teach other people about it, and then send them into a funnel to buy your book, because that's what Lloyd did to start his side hustle. He taught people how to invest. So he said, I started a side hustle, took that money and invested, and then he wrote a book about it. And then he launched his to teach other people, and now he's teaching people how to invest and become millionaires.
Yeah, it's great. If you have something that's valuable, people will always want it. And
Mhm.
if you provide a valuable service, it benefits you and the person that's purchasing your service. And it's great. There's so many things you can do and whatever you like doing. And like you said, your podcast, you can get sponsors so that people you can put a free podcast out like I do. I have sponsors that pay me and I don't have to charge anybody for it. So
Yeah. All right. So, do you want to touch on Baba? Because I know that was a topic that we were talking about in the group chat.
you know, I don't have too much to say about Baba because I haven't really looked into it too much.
No
I think
worries.
that would be a good one for next week for Lloyd because he owns like 400. He has like four
Yeah,
hundred thousand
he's deep
dollars.
into the Baba. We
He
can talk
has
about the
like
rates raising.
we could talk about the interest rates. Yeah, that's a
Yeah,
good
because
topic,
that's
and I think that's one that a lot of people are nervous about.
mhm.
And like I said before, we've gone through these things before. We've had interest rates in the 70s and 80s. We had a Federal Reserve chairman that raised the interest rates like an insane amount. And so insane that in today's world, if he was walking around in the streets, he probably would be assassinated. This is how crazy people are because nobody knew who he was without social media. Now
Yeah,
everybody knows who Jerome Powell is. You know, you see him walking around the street. Anybody that's into investing knows in
yeah,
the investing world. So he's trying to be delicate with the situation. He knows he's a global figure essentially, and he's well known in the stock in finance world, investing in finance world. So he's trying to ease us into this. And what he's doing is they're going to slowly do interest rates hikes. They're going to do small percentages at a time. And they're going to try to start unloading the Federal Reserve's balance sheet. So they've been purchasing bonds and essentially keeping the market afloat for the last 2 years.
yeah.
And now they're way in over their heads. They have like $9 trillion of bonds on their balance sheet. So they're going to slowly start offloading them. And they said it's probably going to take about 2.5 years to get it down to a reasonable limit. And the thing I'll say about the interest rates is we'll probably see really small hikes, like a quarter of a percent, maybe a half a percent at a time. This will probably this could affect people that don't have fixed mortgages. Your mortgage, you might see your mortgages go up. You might see more interest added to your loans. You might see your credit card interest going up. Any type of loans you have might be going up. You're going to see car loan interest rates going up. And what the whole idea behind this is inflation is so out of control right now. It's the highest it's been in, like I said, in 40 years. So we have gone through this before and much worse actually. And they're trying to increase interest rates to make money harder to make it harder to take out loans. So there's not so much money circulating in the system. Money is really cheap right now. So everybody's refinancing houses and buying things on debt. So they're trying to get that under control by raising rates, making it more difficult to obtain money and making money more valuable again, in a sense. So you'll see prices like grocery stores, gas. You'll see all indirectly or directly because of interest rates. You'll see things like that going down. Hopefully, in theory, this is how quantitative tightening works. We had quantitative easing in the beginning of this process, meaning interest rates were set to zero, money is really cheap, everybody could take out a loan. Now we're seeing tightening to get inflation under control. We've seen this before. This is how this process works. I know a lot of people are worried because we've printed a ton of money, but I would say money is already digital anyways. It's not like we have however many trillions of dollars in circulation in dollar bills laying around all over the place in banks and in people's safes at home. It's all digital.
Yeah.
So you can, in theory, you can print as much money as you want because it's not backed by anything. And there's no standard for it. I don't think it's really going to matter. And the U.S. dollar is still the strongest currency in the world. And I was just talking to someone in the group about China is going to overtake China is going to become so powerful that the U.S. dollar is going to be worthless. Well, right now, everybody, pull up the Chinese yuan. Do you know how much, Phil? Take a guess how much the Chinese dollar is equivalent to the U.S. dollar without looking it up.
I want to
One
say
U.S.
50.
dollar is equal to, what do you think?
I was gonna go yen to US dollar, but if we
Yeah.
yen to US dollar, I think it's like 50 cents. Like, oh, it's to buy a
What is the
US.
Canadian dollar right now to the
I,
U.S.?
I think we're at like 75 cents. Like, you
So the
guys.
Canadian dollar is 75 cents to the dollar, the U.S. dollar. And you said 50 cents for the Chinese dollar, the US dollar. It's
Yeah.
actually 16 cents to the US dollar.
What the fuck? Jesus.
Yeah. So the Canadian dollar will be the global reserve currency far before the Chinese dollar is the global reserve currency. So I don't think that's something to panic about. We're not even anywhere near that happening. So, and there's far stronger currencies in the world. I almost think Bitcoin's a stronger currency than the yen. So at this point,
Jesus. We do have a question here that I know we usually get every once in a while when we get
yeah,
new listeners, and that's fine. This person is interested in knowing how much you have invested, Tony.
just over 50,000.
Yeah,
Yeah, actually this week, just over
there we go.
between all of my accounts. Between the 401k, my Fidelity account, and then Acorns. So
Yeah, you got out of
uh,
Publix and Robinhood a
which
while ago,
which
right?
which oh yeah, I do have Publix too.
There we go.
So yeah, so a little bit more than that. But I'm 34, so I'm actually behind far what I should have had that 4 years ago. But I didn't really start heavily investing until about 3 years ago. So you can build up an investment portfolio rather quickly, and I try
Yeah,
to put in about $100 to $200 a week into index funds, and it's pretty good. Like total money invested, I have about 27,000, and total value about 52,000. So
there we go. That's a great.
yeah, yeah.
And
And
then
there's
of
no
course,
real secret. It's all just blue chip stocks and ETFs.
yeah, things we preach. Speaking of ETF, actually, we have a question. Let me just see here. Yeah, I got here. I know Tony Skysmansky likes ETFs, and I got really not because he talks about that, but I did my homework, and they've been working well. I put a lot of money in it, but I'm down like Google, VU, and
Yeah.
QQQ. And of course, again, it's the market. The market is being adjusted because of what's coming up. Don't worry about it. If you have one down year, it's fine. It's when there's 3, 4 years that you have to start worrying.
The thing is, too, is with my 401k and my other accounts, I've been doing it for a while, and I started when the market's been on an incredible bull run
Yeah.
for the last decade. And if you started years ago, even if you started in like 2019, you would be seeing some really great profits right now. Even with this year being down overall, everything is just up so much over the last couple years. And for those of you that are just starting now, you kind of can look at it as an opportunity where the market's coming back down to reality a little bit. You're starting to get some things at good valuations. So it's one of those things where you're going to have to keep doing it, and it's going to take a couple years for you to really start seeing the growth. But it's going to pay off. At first, it's frustrating when everything's so up and down, and I've gone through that too. But and then when you zoom out and you look at your portfolio, I'm like, wow, I'm up this much. It kind of just it's a blur and it goes by quickly. But like I said, so I do have a pretty good sizable amount of cash, and it's always important to have your emergency fund, a 6-month emergency fund. And I do have some money I'm looking to put into the market at some point. I think I'm going to put another $10,000 into something overall. Probably 5,000 into. I'm thinking 5,000 into Facebook and then 5,000 into Google once the split happens.
Ooh, that's going to
Um,
be a good buy when the split happens.
yeah, so it's important to keep some cash and not put all of your money into the market because there's always going to be some type of opportunity that comes up, and you're going to be like, man, I wish I had money for that. So. I don't know if I really answered. Did I answer his question? I forget what
Yeah,
his
you
question
did. You
was.
just you pretty
I
much
kind of
said, "Don't
rambled.
worry, it's gonna bad things happen, but with blue chip companies, we're good." Just
Definitely a lot
taking a
of
look
people
here.
that have a lot more money than I do, and there's a lot of people that have a lot less money. So I'm not like Lloyd,
Yeah.
for he's really the model that you're going to want to use. I'm still in the beginning stages.
Well,
So,
it's always
I'm
smart to have multiple levels. Like speaking of entrepreneurs, which is one of my podcasts, Invest in Yourself, the Digital Entrepreneur podcast. You always want to go for someone who's a few years ahead of you. Like Lloyd is now your model because that's who you want to be in the next three
yeah,
to
well,
five
it's about
years,
4
right?
years. Yeah, yeah.
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 So you're 4 years. I want to be where you are in 4 years, and then at that point, I'll be like, okay, I want to be following what Lloyd is in 4 years, and this and that. So
Yeah, I think a realistic goal for myself that I have set is I want to have realistically, I think this is absolutely possible. By the time I'm 38, which will be about 3.5 years from now, I want to have over $100,000 invested alone, not with cash and my portfolio. I just want to have that in my portfolio. So that's my goal is to hit six-figure portfolio before I'm 40 because I started kind of late. So to
oh, you
me,
can
that would be a
definitely do
great
it.
accomplishment.
I think you'll
Uh,
definitely be able to do it.
yeah, I think so, and I think everybody could do it. Obviously, people are at different income levels and different levels of their lives, so everyone has a different situation, obviously. So you just got to do what you can do. But Phil, how is your portfolio doing, and what are you invested in?
I keep it very simple. So I have the stock that I for the company that I worked for, and I'm not going to announce it because I don't
Yeah,
like
yeah,
to
yeah,
talk about that
yeah,
company. And I have Vu. That's it. And because I'm doing this as a full time, money goes to paying different things. So I only able to put only $100 a month into it, but
yeah.
slowly getting more clients in that to take my business up and up. And Lloyd's
Phil,
helping me
I
with
think
that.
you should really consider opening something like the Acorns for Canada and put even just $5 a week in there.
I
And
think
while you're waiting, just whatever you can do, 5, 10, 20 bucks, $30, whatever. And over time, while you're working on your projects that you have going on and whatnot, you'll still be in the market and you'll still be taking advantage of the discounted prices right now.
you're right.
But
You're right. I got to do
I
that.
think that would be good. And you really don't, and that's a misconception. A lot of people in the group are always saying, like, I don't have a lot of money to get started. And that's totally fine. Like, well, most of my life, I didn't have a lot of money until I was in my later 20s. And everyone's at different levels, and you don't need a lot of money to get started. It's going to grow over time and it compounds. And you want to take advantage of it. You want to be in the market all the time,
That's
all the
right. Yeah.
time.
I think I will. I think I'll do that. Who we got here? We got our good friend Mark here from your
I had a beer for you today.
yeah, there we go. Having a beer coming in there. It's 5 p.m. getting off and just tuning in out. Looks like I missed most of it live though. It's no worries. Luckily, once this ends, you can go back and watch. Lloyd had
Yeah.
lot to say about uh, uh, Facebook, the growth that's coming there. Of course, you talked a bit about Babba because that's his baby pretty much, and then we talked about the Fed rate there and that.
To
Do you
to
have anything
finish
posted that
up,
goes?
Phil, yeah, to finish up, I very briefly, we talked about the interest rates. I think we'll talk about that more in depth.
When it happens.
Uh, do you have anything posted that just goes over Acorns? We need it up on what does that
You
say?
read up on it. I guess they're asking, do we have an episode talking about Acorn? I think
Yeah,
do
I
you have
do.
one on the Stock Bros?
Yeah, I do. I'll post it in the group chat or in
Yes.
this. I'll post it in this chat when we're done with the podcast.
Yeah.
Um,
You have a few
but
episodes that go over different trading apps, right?
honestly, it's probably probably one of the safest avenues to go with is Acorns, because they already have pre-built portfolios for you, full of ETFs like VU, the S&P 500. We talk about all the time. It's
Yeah.
very well balanced. But I'll put more information in the chat. But I wanted to touch up briefly on the interest rates and the Fed hikes in March. I think that's a good topic. We're going to cover more closely as we get to that point, because it's kind of anyone's guess on what's going to happen. We're all kind of guessing interest rates are going to cause a little bit of a panic and the market's going to go down a little bit. But that's good. That's an opportunity for people that are new and haven't started investing yet. You're buying at a cheaper price, and you might be down for a year or two, but man, it's going to pop, and it always does. And when it pops, you're going to have it at cheaper prices, and you're going to be so glad you did. So that, and I do think this year is probably going to finish in the red, but that's okay. It's okay to buy while it's in the red, because you're building your tree, or you're planting your tree right now, you know?
Yeah.
But we'll cover up more of that as we get closer to that happening and that meeting happening. So
There we go. All right. You ready to sign off?
I'm ready, man.
All right, Tony, tell us where we can find you and listen to more of your wisdom.
Yeah, Stock Bro podcast, which is totally free. I do have sponsors, so you can fast forward through the first 30 seconds. I still get paid from them. It doesn't matter to me. Yeah, you can find me there, and I do have a course on Udemy, which is pretty cheap. It could be anywhere from $10 to $20, depending on the sales that they're running. I actually don't control the price all the time, and that's it. I appreciate all the listeners and the support, and we have a great group, and looking forward to continue growing it even bigger.
Yes, sir. And of course, I'll give a little shout out. You can always find out more about Lloyd Ross, our new co-host here. Just go over to his Instagram at Lloyd James Ross, or his website, lloydjross.com. And you can learn about him and start your side hustle and start planting money trees if you're interested there. And if you're interested in following the podcast, please do check out us on Instagram at Stock Dirty Pod on Instagram and all the social medias. And I want to thank you guys so much for listening and wish you all a great night and smart investing.